Now, I would like to present Tezos, which is a very fast-growing, interesting crypto that, as you said, Larry, it relies on a proof-of-stake protocol, meaning it has a crypto with a dividend-like features. So let's discover more about Tezos. As you can see, it's headquartered in Switzerland. It's a fairly new currency, and it's well spoken by the whole industry. His market cap, we see it's 1.5 billion, and it passed from 0.76 to $3.62 over the last trading years. It suffered a bit from the corona, with all of the crypto going low, but if you were invested in January 2020, now you would have gained 50%. So the 30-day performance is 22. We see the one-year performance, 68. The very interesting features is his blockchain protocol, a proof of stake, differently from the proof of work from Bitcoin. I will explain in a simple manner this in a few minutes. The dividend-like features, it's around, as of yesterday, I'm confident either today, at 6.57% per year return on passive income. So let me explain how the proof of stake from Tezos works. We can do, I know that with the audience, there are a lot of crypto savvy guys, and thanks for being here. I wanted to have this slide very simple and to compare proof of work and proof of stake with the history of economy and currency minting. We can do a little comparison between the Middle Age and the proof of work. In the Middle Age, miners searched for precious metal for their kingdom so it can mine new coin. It means there was an actual work to be done, and then the kingdom can mint coins. The proof of work, it is the protocol in which Bitcoin relies. It have the same principle. So miners search for a solution to an equation to mint new Bitcoin, meaning that computers needs to consume electricity, do some calculus, which is the work required, and the computer that find the answer first than the others then have the right to print a new block that can be used to issue new Bitcoin. Where we see the modern economy today, we see that banks have their own assets and they can print new money, new debt with interest against their assets. The proof of stake protocol is actually something very, very similar. For example, with Tezos, you don't need to have that hardware equipment in order to be a miner. You need to have your wallet with some Tezos assets, minimum 8,000 Tezos. Today it's trading at $2, so plus or like $16,000. And you can be a miner, meaning that the proof of stake mechanism, it will choose very smart but randomly amongst all the miners that block their asset for a certain time into the Tezos environment. And with this search, with this random picking up of my wallet or your wallet or Larry wallet, we will be the validators of the new blocks, and we will be rewarded that famous 6.57% per year. So let me give you a concrete example. As I said, Tezos coin holder can participate in the validation process by making a security deposit. This is the statement. So you will be called the bakers. This process is called baking, and you will be rewarded for contributing to the network. So you can see the similarities between our modern economy today when banks have their assets and they can print money with it. Let's go to the token economics on how Tezos can do these dividend-like features. Here there is the effective yield compared to the percentage of the staked Tezos. So now we are around in between 60 and 80% of Tezos already staked, and this is why we see a effective yield of 6.57%. Some time ago, where we were at 50% of the staked Tezos, the yield was 10.6% per year. Now, if we want to see this in money terms, we know that the annual reward is 6.57. The minimum collateral required is 8,000 Tezos, and you should lock up your Tezos for minimum 14 days. What does it mean? That every 6 hours and 36 minutes, in average, because of the algorithm that choose who will be the validator of the block, you will get reward every 6 hours 2.51 Tezos. This will result in an overall yearly reward of 6.57%. So let's do a very simple example. If you want to deposit 520,000 plus or less Tezos, so USD 1 million price as of yesterday night, very late, you will be rewarded $65,700 per year, which is 180 per day, which is 5,200 per month as passive income, not speaking about price appreciation. On top, you can earn as price appreciation. We see that all of the industry loves Tezos, it's growing, and this is why I want to show you the volumes and the price. You can see the volumes. This is a price and volume snapshot from 1st January 2020 till yesterday. Volumes are going up, they're trending up. We see a little decrease from the $3.6 per Tezos to the price of today, which is 2. This is in the same time as Corona, in the same times all of the crypto went down. We know Bitcoin went from 10,000 to 6.5, and this morning is up by 7% to 7,000 back. And this is very promising for the Tezos industry. As 21Shares, what we did for the investors that would love something like that, we structure an ETP that can stake on your behalf and that will give you the exposure to the Tezos price. It's all the time fully collateralized. So what happened is that with the deposit, with the 100% collateralization in Tezos, we are participating in the staking process. We will give these 6.55. This is a data as of yesterday, so during the time can change, but everything that we will take as a reward from this activity, we will include in the price of Tezos. So as of today, as I said before, from the 1st January to today, the price is up 44% for our ETP. You can find our ETP listed on the SIX, on the BX Swiss, on the Börse Stuttgart. You can easily purchase it from your bank or your local broker in 3 different currencies. This is everything for this short tutorial about Tezos. I thank you very much